Welcome to the sellthatoption.com YouTube channel. If this is your first time joining us here, taking a look at any of our daily recap videos, please feel free to reach out to me at ryan@sellthatoption.com should you have any questions about the process or anything that you're about to view. Now, momentarily, you're going to get to see a dated version of what I send to our members here at sellthatoption.com every single day after the close if we initiate a trade. Okay, and so I send these after the market closes. They're able to take a look at the trades that I make. I talk about why I entered the trade, what I was looking for when I initiated the trade, my profit targets for that trade, and any general market commentary that was important when we were looking at that trade. Now, it's important to note here that these are trades that you can take a look at the night after. You don't have to be chained to your computer all day. See if there's something that you like and then initiate the trade potentially on the next business day. Okay, and so what we're going to do is here is if you are a member or you're looking at a membership, what you would do is you would come over here, select members, and then you would click daily recap videos. Okay, so let's take a look at exactly what a daily recap video page would look like and how our members would utilize that page. All right, now here we are in our daily recap video page, and so you can see a little bit of education that our members would get to read, and then you just go down here and you click play. Okay, now I've got it set up to where the most recent video is always the first one that shows up. You can see the date, and so what you would do is you would just click play, and then you would be able to see the video. Okay, I don't have any of the other videos set up, but what you can do is you can come to this page right here, and then you can see all of previous videos that we have listed on the site. Okay, without any further information, let's get right into the daily recap video. All right, and welcome. Today is January the 2nd, 2018. First time I've got to say that in a daily recap, so I'm super pumped about that. Let's talk about the day. We had an awesome day. We were up $2,100 today on these neutral spreads, so we're starting the new year out extraordinarily well. So I'm really pleased about how the day went. What we're going to do, as always, is we're going to go over our opening trades as well as any closing trades that we might have gotten into. So first, we did close a typical VIX trade for 5 cents on those calls. We'll talk about the profit numbers here in just a second. And then we did open up an iron butterfly in both the Qs and IYR. So we're going to take a look at what each of those look like, as well as XME. So pretty active today. As always, we try to average 1 to 1.5 trades, so anywhere between 5 and 7 or 8 trades a week. And so we were pretty active today, and those are opening trades, and so we were pretty active today. But I feel really good about the positions that we opened, and we're going to absolutely get into our applied volatility levels as well as our market watch levels. Now, for those of you all that are not subscribers and are viewing on YouTube, these do go out in real time to all of our subscribers here at sellthatoption.com. Okay, so let's get right into our implied volatility levels. All right, and here we are in our implied volatility levels. As you can see, the Qs have an implied volatility of 54.73. XME has an implied volatility level of 38.05. And IYR currently has one of 29.34. However, when we initially entered this position, it was around 31 or 32. And so this is kind of that first check for our checklist when we look to enter trades, is where are our implied volatility levels. For each of these, they absolutely were elevated enough for us to be interested in putting these trades on, and so that's why you saw it. But as you can see, IV is pretty elevated across the board. We have quite a few over 50. We have 3 or 4 over 40, and then a handful over 30. And so we are in a place where we can sell premium at slightly elevated levels, which is something that I'm going to look to do pretty regularly. Okay, let's get into our first security, the Qs. All right, and here we are in our Analyze tab for the Qs. We did put this position on relatively early in the morning at the 157 center of the strike. We saw the Qs continue to move up pretty high over the course of the day, and so now we're looking at a 158 and change reading for the Qs. And so we're a little bearish already on this position, but we do have all the way up to 162.10 as a break even on the upside. And so feeling pretty good about that. Okay, so we do have a current probability of profit of 45.31%, and as we know with early management, that tends to be a little bit higher. Okay, so now what we're going to do is we're going to take a look at the chart for the Qs and see if there's anything major in regards to the technicality of the chart or the technical analysis of the chart when examining this position. Okay, so as you can see, our till line is at 157, and we're kind of centered. We did see the Qs move up 1.75% on the day, and so it had a big day. Wasn't on a ton of volume, but there was a lot of buying power and buying pressure here. And so we do see our break-evens at 151.90 at the bottom. Technically, that's in a really good spot because we see it is where support has held the last two times. So I don't necessarily anticipate, unless we see a major break of support, that that's going to get challenged too much. On the upside at 162.10, though, we do, if we do break past this 158.77, then we might see a challenge up there. If we do, we'll look to adjust, but for right now, we're just going to let the position continue to move back and forth and sideways. All right, so this is what it looks like on the chart right now. We're really watching these break evens. Let's get right into XME. All right, now here in XME, this is a security that I didn't trade at all last year. I think that it's the S&P 500 metals and mining ETF, and so it's just not something that I had traded before. So let's take a look here at the risk diagram. As you can see, this is a straddle. And so the straddle does not have protection. It's centered over the 37 call and put, and we took in $1.55 of credit here. Further, you can see that we do have a probability of profit at 54.18% right now, and our break-evens are $34.46 all the way to $39.55. Again, one of the primary reasons we got into this security was because IV was elevated, and it fit all of the other checks on our list. Okay, so really nice wide break-evens. I actually really like this trade a lot. I anticipate that this is going to be a profitable trade for us, and we'll look to take it off at 25%. Okay, let's get right into the chart. Now, I do want you to see here that we actually have both areas or both break-evens on the chart. The 39.55 chart level is just so far above the current market that we aren't seeing it. To note here, since we did get into this trade today, we did see some pretty large volume here. And so there is that. Now, on the upside, we are in a 52-week chart, and there is nothing but clear skies kind of on this breakout of the 35 level. So if we are going to get challenged, I anticipate that it'll be to the upside. However, this move that has pretty much been going straight up from 30 simply cannot go on for forever. And so I actually really like this straddle here, because I anticipate that we're going to see some sideways movement in the market. Go back to the February price level. We see in February the security moves down, and then it basically stays the same for almost 5 months. Okay, so that's kind of what I'm expecting to see. I'm expecting to see some sideways movement because securities don't move in a direction like this, which has been almost for 2 months for forever. Okay, and so I do really like this here. Technically, that 35 level is a pretty important level, and we are below that on our break even. The 35 level constituted a pretty significant breakout here on the chart, and so I actually like that as a support level. And so, quite frankly, I'm going to be paying much more attention to the upside and kind of seeing if we do end up challenging that upside than the downside right now, simply because I anticipate the 35 level will act as significant support, and we are below that 35 level. Okay, let's get into our last security today, the real estate ETF, IYR. Our last open trade was in IYR. As you can see here, we did actually go with an iron butterfly rather than a straddle because margin was significantly less to carry. Now, one of the things that you'll notice about IYR is that when it comes to the probability of profit, we're a little low right now at 44.93%. However, one of the things that we're going to see here in the chart is that IYR has been pretty much sideways for months. I have traded a 80 or an 81 or an 82 straddle with protection or an iron butterfly pretty much every month for the last few months. And so I don't necessarily see any reason for that unless something on the macro level of our economic system changes. And so this is it. Our break-evens are 78.84 all the way to 83.17. And as we're going to see here in the chart, I feel really, really good about those break-evens. Okay, let's get right into that chart. Now, from a technical perspective, this looks really, really solid. We have our break-evens in the pink lines right below some critical areas of support, and so that looks really solid down there. The security hasn't moved below that level since the summer, so since early August, it looks like. And then it barely breached the top break even on this little rally that it had earlier. Okay, and as you can see, we are on a little bit of a downtrend since the last expiration period ended, which is why we are seeing higher levels of implied volatility. I love trading IYR. I think IYR is a pretty predictable and you can get decent credits. Unfortunately, the margin to carry IYR is a little high, and so that's a little frustrating because if we were in a straddle, our break-evens would be even wider, and I would feel even better about these positions. But we're going to try to manage this at 25%, and so just be aware that is already in play. That closing order is already in play, but from a statistical and a technical perspective, this looks really, really solid. All right, let's get into our last trade of the day, VXX, closing those naked calls. All right, and the VIX trade that we closed, the horizontal line is the call that we sold to the 32 call, and the vertical line is the date of our initial trade. So as you can see, therefore 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, we were actually underwater on this trade. So it's really important, at least in my mind, to go ahead and stay with these VIX trades, because unless something changes on the macro scene, right, we know that due to contango and the general flow of the market and the general way that VIX and volatility products work, that they are going to suffer from contango, and they are like that leaf blowing in the wind. Eventually, they're going to fall to the ground. Okay, and so we closed this trade off today. We initially sold the credit for $2.39, and so there was only one day where we were ever actually in losing and past that initial break even, which was 5 or 6 days after the fact. And then we bought it back for 5 cents for a total profit of $1,148.60. Again, when we compare the overall size of these VIX trades to our portfolio, we go small, right? Because we know fundamentally that something crazy could happen to the market, and we don't want our position or our portfolios to blow up, and so we are going really, really small on these positions. Okay, so go small, that way we can adjust and make sure that we don't get blown out, but we can take advantage of what is a very, very profitable week in and week out trade. Okay, so this is the daily wrap up for us here. If you have any questions about any of the trades that we entered into today, please feel free to reach out to me at ryan@sellthatoption.com. Otherwise, as always, stay humble, stay hungry, and here's to our success.